some data around a central question, which I think gets asked a lot. Now, people who are deep in stocks know the answer to this. People who are deep in crypto know the answer to this. Even people at home who aren't deep in either world probably know the answer to this. Yeah, they're different, of course. But today I wanted to show you some data behind both of these markets. We're going to be comparing the S&P 500 to Bitcoin and show the dissimilarities, and then show at the end of the day what I think is the biggest similarity for us as active traders here on The Leap. Now, Jermal, maybe you can kick it off with just like looking at the charts here, looking at the long-term price action from the start of the year to now. These things don't look the same. And now, while today stocks and cryptos are down pretty significantly, we've had days in recent memory, as recent as 2 or 3 weeks ago, the NASDAQ made an all-time high the same day that Bitcoin was off more than 5%. They definitely look different and they trade different over the long term.
Yeah, most definitely. I mean, honestly, like I was alluding to earlier, Bitcoin tends to be a little more volatile than SPX. I mean, but again, you know, I always have to say this, I feel, because that word volatility seems to spark up, you know, some anxiety in people. But, you know, when you're trading something that has some volatility to it, it has some movement to it, right? And you want that movement. You want that ability to be able to trade that movement. So, yeah, Bitcoin typically is a little more volatile than SPX, the venerable, you know, index that we all know and love. And you can just see it, you know, right here. Of course, there was, of course, a big sell-off sometime in late May, and that's what we see where the chart crosses the lines there. But you know, in general, they do not trade. They I guess that at times they have traded the same way, maybe even foreshadowing a little the next thing. Sure. But you know, the idea is they don't look the same. They don't trade always the same way.
And I'm glad that you bring up the real crux of this chart is the smack dab center when the white line goes below the red line. And I bring that up not as like, it's no technical analysis, it doesn't matter, but you can see the first half of 2021 so far, both markets are up. But since Bitcoin has a little extra juice to it, and I like the use of little, the qualifier by Jermal there, the volatility in cryptos is like 5 times as much as equities. And so, yes, a little bit more volatile there. And so when both are performing well, Bitcoin is up. I mean, look at that y-axis on the left side there. It's up in the early part of the year from 30,000 to 60,000. That's 100%. Whereas S&Ps are up, but they're up, you know, from 3,800 to 4,200, $400 on 3,800, you know, around 10%, which is, like I say, like a tenth or a fifth of the volatility of Bitcoin. But yeah, then you've got this crypto market sinks. It gives up all of those gains, gets all the way back to where it started at 30,000, and then bounces back to middle of the range as S&Ps just kind of have grinded higher all year. So they definitely look the same when times are good for both Bitcoin and Ethereum and everything else, probably going to outperform. When times are bad, it's probably going to underperform. You're going to see more selling. And to your point of they don't tend to go in the same direction. You're right. They don't tend to go in the same direction. Correlation here topped out at positive 0.25. That's really as low as it gets without being, it's essentially a rounding error off of 0. And that correlation being so low, maybe you can explain a little bit what that means. It's just like when S&Ps are up, you can't necessarily expect something from Bitcoin and vice versa, right?
Yeah, no, you really can't. But, you know, that said, as we both pointed that out, that said, over the last like month or so, you kind of see, and I think you probably more saw it on the last chart than the actual correlation chart we're looking at. You've seen them kind of move a little bit together. I don't think there's necessarily rhyme or reason to it. It's not like, I don't know. You never know in these type of situations why that's been the case over the last month or so. It just is what it is. But in general, it's not like you can say I'm, you know, buying Bitcoin to hedge my S&P. I don't feel. I think it's just a one-off trade, right? Like, and I think because of that, that creates a lot of opportunities, I would say.
Yeah, absolutely. Because what we love out of a high correlation, Jermal, is like, oh, okay, like I can trade that thing against that thing. which is great. It presents a unique trade. What we love about a low correlation is like this thing's completely different than everything else. Like I can be long, short, or sideways stocks, and my trades in crypto, I'm never going to be Texas hedged or like anything like that. I'm good. I can do whatever I want in crypto, no matter what's going on in my stock portfolio, which is great. It also can be, it does lend a little bit to that volatile piece though, because since it is its own distinct market, it can move all over the place. Now, that being said, since we have new products like the small crypto futures from the small exchange, which is like a stock market for crypto, and you have not only Bitcoin, but Ethereum, you have Cardano, you have Solana, you have all these other coins, you actually have a pretty robust, and like you say, like maturing market that presents in its own right just a distinct asset class from stocks that have their own opportunity. Now, here's the only place that I could find where they're actually pretty similar, and that's I'm coming down the home stretch.
And I already know it. I swear to God,
I'm really rolling here. We're talking correlations and everything else, and Jermal just slaps a spider out the sky.
Take two. Go ahead.
All right, well, John, can we cut that? Actually, no, this is a live show. Cryptos and stocks can present similar trading opportunities. So like the correlation's not there. They're not going to majority of the time move up or down together. But what I thought was really interesting is that both of them have a little bit of an upward bias, which is, in Bitcoin's case, just 1%. That's as close to a 50-50 market as you get. Stocks drift higher a little bit more often. They both have an average move right around zero, just slightly positive. And they both have standard deviations that are, 5 to 10, 20 times that of that average move. Now, what does that mean? That just means that Bitcoin on an average day is up $50, which is in a product that's $50,000, a rounding error. Really nothing to write home about. But what's really nice about that $2,000 move is that you get $2,000 of wiggle room around that average, which is essentially zero in S&Ps. Anybody who trades E-minis or micros knows that like outside of $30 is a pretty significant day. That's like 1% in the market. And so if it's up over 30 or it's down over 30, that's where some trading opportunity might be. Same with Bitcoin when it reaches, and you feel this a little bit internally that like, oh, Bitcoin's down $2,500. That's a big day. Or like Bitcoin's up 3,000, that's a big day. They are very similar in that like we just look for big moves, and that's where the trading opportunities are. And you can easily calculate them and kind of lay them side by side. They look very similar here, right?
What time period is this over?
This is from 2020, the start of 2021 till now. Okay. So yeah, the average daily range in Bitcoin is about $2,000. In S&Ps, about $30.
Yeah, I mean, I think, this shows how they can present similar trading opportunities, not on the same days, not in the same direction, right? But it just shows you the type of moves that we potentially get. I guess I'm not really surprised by the more than 50% up ratio in either one of these. I mean, it just lets you know typically people are buying. I mean, nobody's going out and nobody's short selling SPX. I mean, both the markets trade.
Well, both the markets are up on the year. So like, of course, it's going to be a little bit, it's going to be on the upside a little bit. Yeah. But what's really intriguing to me is just like, at the end of the day, they're uncorrelated and they present such great back and forth, especially these cryptos, that you can feel comfortable, like in the same way that you might buy the dip on S&Ps, like today they're down, well over that normal day of $30. Bitcoin is the same thing. It's just like $30 in S&Ps is about $2,000 in Bitcoin. So, stocks and crypto very different in terms of their directional movement, which creates a really nice opportunity in the way of like diversified trading. But when it comes to like how you actively trade, where you might be looking to buy or sell as an active day trading, futures trading scalper, whatever you want to call yourself, at the end of the day, they're prices that go up and down, and you can calculate standard deviations or technical analysis tools on them, however you do any stock product or everything else, and trade the opportunities that you got there. That all makes sense to you, right, man? I mean, this
Most
is
definitely.
what we're going to be doing when the product comes next week. It's just going to be big moves. We're trading them back and forth.
It's also really interesting to take it to options real quick, like the idea of when we talk about, there's similar trading opportunities, but they are different. I mean, let's just say on average, the implied at the money volatility on SPX is like, I don't know, let's call it 13, right? Like 12, 13 or something like that. I don't know what it is in Bitcoin. I don't think there's any true options product, but I know it's over 100, right? Like, so that shows you the difference in between these two products. And yet we have some stats there that show there's some similarities a little bit too.
Well, that's what's great about implied volatility or, standard deviations. It's the great equalizer, right? Like every market, new, old, it could have sprouted up last week. We can wrap these statistics around there. And so that, if I'm used to trading options and VIX, the average VIX is, like you say, maybe let's just round it to 15%. And the average volatility for Bitcoin is 100%. You can go in there and trade strangles and call spreads and put spreads and everything like you normally would. You just have to know, oh, okay, it's 5 to 10 times as volatile, so I'm adjusting my strikes and everything else. Same with day trading and standard deviations. It's just like, oh, this market may be newer and it's got its own thing going on, but since I can wrap these numbers around it, I'm just as comfortable as I would be with S&Ps. Just make sure you're trading small and you're trading active, everybody. And we're going to actually get to some small active trades next. Splash into futures with Pete Molmat, a lot of stuff moving. So please stick around. We're going to get a lot of trades on the board. Jermal, thanks as always. And thanks everybody for watching. Peace.
Later.